Hey everyone, welcome to Money Wire Work. Today I'm going to talk about the stock market. I'm going to give the update on the S&P 500 as well as some of the trades I've done the past couple of days, past week or so. Jerome Powell did speak this morning and the markets did react to that. Continued its uptrend basically because there was no real new information that he spoke about. He basically just said we're going to remain hawkish until inflation is down. We want to get inflation down to the 2% mark. That's their goal. And he talked about how political environments aren't necessarily something he's interested in or affects his strategy. Whether that's true or not, at the end of the day, we don't really know. I mean, he has a job. He's very involved in politics. Biden largely controls who is in that seat. So take that with a grain of salt, but it actually is something good to hear. So this is the S&P 500 on the daily chart right now. Now we talked about this resistance right here and how it was going to hit this resistance and most likely take some sort of breather, and whether or not it was going to come down and then come back up, or whether or not it was going to come down and keep going to a lower low. I do think we're still heading to a lower low, but it remains to be seen. I mean, trading is very different than long-term investing, right? It can change very quickly. Okay, so I want to bring up these drawings that I have here. So the reason why I did is because I actually I had a credit spread opened on SPY to go short on it, and I played that about right here on this long candle down. Whoops, if we just keep that there and lock it in there. Now I opened the spread to go short on the S&P 500 right here, and I actually also entered the SQQ positions. And I actually yesterday I closed both of those positions and started to go long on a couple different things. I went long on the S&P 500 on this day, so we're up a little bit. And I went long a little bit on some crypto, and we're going to do just speculative right now because I think the bottom might be near. I could see one more leg down and then heading back up, but I do have stop losses and I am still just trying to play this slight bull rally. I'm not trying to head it all the way up to the top. Now, what I like to do for credit spreads is I had the expiration date on the 16th. So I put a line down here to basically pinpoint that. And then my break even line was right here. So I actually on this credit spread, I entered right over here because I do remember I went in the red a little bit before I actually started to go down and take a profit. Now my profit on the credit spread, it was 18% profit, so that's really good. On the SQQ, I think it was about 24% profit before I actually closed that out. And I'm going to be looking to actually re-enter some of those. So I can get rid of this now that I went through it. And then I want to just talk about these trend lines to kind of explain why I entered that. So when you have something like this where it's hitting the top of the trend channel, you're going to see some relief. So to catch that move early and use these trend lines to indicate that there is going to be a potential reversal will give you a huge advantage on entering those. And then that's why it's important to have stop losses. I had a tight stop loss on the SQQQ. And the reason why is because if this was the bottom and we're going all the way back up, anything that I had in the SQQ, you can consider it gone because it's an inverse ETF to the SPY, and we may never see any of these previous prices before. So you want to keep a tight stop loss on SQQ, and you want to manage your position size on that. So that's what I did. I made a nice profit on that, and now I'm looking to just go long if it enters or if it comes back up and hits this resistance line and then starts to go back down again, or if you zoom in a little bit and it comes up here, hits these moving averages and starts to come back down, I'm going to start entering shorts once again. But I just wanted to talk about that. I also added the RSI on the bottom. I do like adding the RSI with the TSI. The reason why is because you can see here, if I just move this over, you can see how the RSI uses this yellow line, which is really just a moving average, as a support and resistance. That's something that's not always clear on the TSI. So I like that. I also made a really in-depth video about the RSI, and I highly suggest you watch it. I also made one on the simple moving averages, so check out the Trading Basics series for that at the end of this video. I'll probably just use them as the ending screen, so you can click on those right after. Okay, so what we're looking right now, as far as what Jerome Powell said, he didn't really say anything new, which is what the market wants at this point. So I entered the shorts positions around the Jackson Hole because I was listening to him speak. He was very hawkish in that. I saw how the stock market reacted, how traders reacted, how investors reacted to that, and it was very hawkish. So I felt safe entering there. I also knew we were high up on this resistance line, and I feel like this rally up was inevitably going to lose steam around that time because everyone gets scared about what Jerome Powell is going to say. Okay, so as we know of right now, the Fed is business as usual. They're going to continue to raise rates until inflation gets under control. Inflation has just seen a slight inflection to the downside, but we haven't actually seen proof of concept yet. We haven't really seen that. The 2-year bond yield, as you can see right now, has not inflected to the downside, which is really what we want to see in order to see the market come back. Basically, what's happening is big money is moving into safer investments. They're moving into bonds. They figure, why not get a smaller percentage out of it versus keeping it in the stock market, which typically does about 10%, because it's just consistently losing money. So we want to see this right here. We want to see something come up and then start to come down and go through these simple moving averages. And when we see that, we see inflection to the downside on the inflation. That's a sign to really go long. So as far as my long positions right now, they're a small percent. They have a tight stop loss, which I always suggest having a stop loss on that. Okay, always have a stop loss on your trades. Okay, we can just go down the list here. Let me just go to Bitcoin. Bitcoin right now, you can see all of this right here has just been erased. This whole move up, remember how we talked about how this was slightly going down on a trend channel, this was slightly going up, this was more so going up, has pretty much completely been erased. So my crypto that I have right now that I just entered long in is Ethereum, and that is because the reason why I have Ethereum is because I want to still play that catalyst coming up. And you can see Ethereum still has been stronger right now than Bitcoin. So I have a type stop loss on it. I want to just try and play this quick rally, but we don't know if it's going to happen. I just think it might happen. But again, everything depends on the rest of the market. If the S&P 500 starts to come back and Ethereum's got this catalyst coming up, we might see a little bit more to the upside. It can play a quick move there. But you know, with the way this market has been, if we just go back to the S&P 500, the way the market has been, I just am starting to get a little bit more involved in shorts, just because this thing could last into 2023, middle of 2023, maybe the end of 2023. We just really don't know, okay? So we can sit on the sidelines all we want and wait to go bullish, or we can dabble with some shorts a little bit, and that's what I'm doing. I'm using these trend channels to do it, okay? So I have no problem entering a short again if this starts to come back down, and if we see the RSI bounce off of this line right here, as it did up here. If we just see this start to come back down, I'll enter in shorts again. I'll open another credit spread. I love credit spreads because if you do it somewhere around at the money, which is what I did, as far as delta is concerned, it gives you about a 50-50% ratio. A lot of people really like to use delta to determine probability. I don't know if it's necessarily that cut and dry. I don't like to use it necessarily as that cut and dry. I think at the end of the day, it all just kind of evens out, because if you go with something like a 0.7 delta, your risk to reward ratio reflects that. So at the end of the day, it's all kind of 50-50. So for me, I might as well put my break even at where the money is and just trade off of the technicals. And that's how I like to trade the credit spreads. So I did actually scale into my credit spreads a little bit too. I started with a couple contracts and added more to that before I eventually sold out, and I did the same with SQQQ. I got, again, a pretty good amount of profits on both of those. I'm pretty happy about that. And I'm putting myself in a position where I'm gaining some money and I'm controlling my long positions right now, so that when the market does come back, when I end up going full in, when I like to keep cash on the side, but when a lot of my money is back into the market, by the time we get back up to here, I'll be in a better place I was when it started initially go down on December 31st, December 30th of 2021. Okay, so that's really what you want to do in a downward market. You can control your losses. You can enter these little upticks right here on the blue clouds. And you can watch the TSI, watch the RSI, and you can trade that so that you're in a better spot when the market comes back. All right, so as I said, I highly suggest you watch my simple moving average and my RSI videos. I think they're really awesome. They're in depth. They take quite a while to make because of how detailed they are. They're aesthetically pleasing. I try to make it entertaining for anyone, but also fun to learn something as well. Okay, so if you like those, check that out. If you like this channel, please like, comment, subscribe, hit the notification button. I really appreciate it, and we'll see you next time.